Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
All right, guys, welcome back. I guess we're at the 26th episode here on Mortgage Sweet Spot. And today we actually brought in, kind of talk to the borrowers out there about the different kind of lendings, but the specific lender we brought in is a MIC. And that MIC's called 3 Point Capital. And awesome rates. It's a really good lender to work with, really communicative on emails, obviously getting a hold of the borrowers, things like that. But tell me one thing. And this is Justin Theriault. Obviously, he's the BDM. He's kind of opening up 3 Point to the Ontario market. What does 3 Point stand for?
So funny enough, when I joined, I had that same question. It's actually, so we're actually based out of, not Victoria, out of Kelowna in BC. So obviously lots of mountains, ski mountains, stuff like that. So 3 Point is actually a climbing term. So it's actually 3 points of contact on the mountain. So when I came aboard, we actually did a complete refresh, complete rebrand that actually came out last week, actually. So we actually just completely changed our marketing, everything with regards to climbing, mountains. So we came out with our Pathfinder program.
Yeah, that's right.
And our elevation program. So really just kind of geared towards, flexible, fair, transparent products for our broker partners and our borrowing base.
Yeah, let's talk about the products then. Like, what are you guys mainly looking for in a borrower? Like flipping, I'm assuming, things like that? Or what are we looking for?
Yeah, so honestly, like the lifespan of a client on our book of business usually lasts around 12 to 14 months. So it's really, clients that, just need that short-term solution, whether, like if they're bridging between purchases, like, the market that we're seeing these days, clients would have thought that they would have sold their property by now, but now they're kind of trying to carry two mortgages at once. And obviously that's not really conducive to getting, traditional financing. So we're seeing those bridge type solutions. But honestly speaking, like, I would say like the common misconception when it comes to private lending and mix and syndications and stuff like that is that it's really only for borrowers that have poor credit, income challenges and stuff like that. But like our average credit score on our book of business is actually above 700. So I think we're hovering around 730 is our average credit score on our book of business. So it's really not necessarily clients that, have those credit challenges. It's really just clients that, because of where we're going with regards to credit boxes when it comes to traditional A and B.
The compartmentalization of literally every type of like lending has happened in the market.
So we've seen a huge trickle down effect where if you looked on the surface at a borrowing profile or a deal as a whole, in traditional, call it maybe 2-3 years ago, bank deal all day long. But now with regards to, where the market's going, especially with like these tariffs and, the different uncertainty, like we're starting to see that trickle down effect where that borrower today, based on the credit box that we're seeing from traditional lenders, they're falling down to us. And that's why we kind of have that quick churn because, we're hoping that they can graduate on. I mean, someone that has a 700 plus beacon score, good income profile, good location, like there's no reason why that they would have to stay with us long-term.
Yeah. And then here's your next thing too. Like you don't want long-term, but let's talk about this. Like what is a long-term where you compare maybe yourself from a B side, a B lending lender compared to a MIC lender. So let's just go through this quickly because I want to talk about this. I go through almost blood samples, getting income, so much income, so much more documents to go to a B lender. Mm-hmm. And my rate would be probably let's say 5.5, maybe 5.8. And I'm talking as of June 2025 right now. Okay. So 5.5, maybe even sometimes 6%.
Yep.
Well, with way less documents, let's say, a little lighter load, not having to go through all those hoops. What rate are you giving? Let's say 65% loan to value, which I'm getting 6% from the B lender. What are you giving that out at?
We're just under 6.5.
Just under 6.5 for way less documents.
Yeah, I mean,
so that's it. And if we don't have enough time to gather our documents, we might as well go 3 in my opinion, because the rate's so competitively low. It's crazy for that situation.
Yeah, I mean, there are borrowers where, you might have that KYC with them and, they tell you, Duncan, like, I don't really want to provide you with 12 months worth of bank statements, business financials, and the whole 9 yards. Like, I'd rather just have something that's headache free, and I'm okay paying a little bit more of a premium on the rate because, I don't have to go through all that.
Yeah.
So we're seeing some of those clients that, or even, like right now, like call it maybe a year ago, 18 months ago, you could go to a B lender and do a 3-month or 6-month bank statement program and get away with that. But now with the way FSRA is going, all these programs are going out the wayside with the B lenders, and they're having to collect more documentation. So you might have someone that's newly business for self and doesn't necessarily have the 10-year, doesn't have 12 months worth of bank statements to get approved on the B side. So they come to us, and again, they're with us for a 1-year term, maybe, a second renewal term with us. And because our products are fully open, you have that flexibility where once it gets to the point where you think that you can collect enough documents to get them to the next level, they can pay us out and not have to worry about any penalties. And,
Yeah, so I'm going to touch on that too. So FSRA, guys, is the Financial Service Regulatory Authority of Ontario. Just that's basically, they overlook everything. That's what he's talking about. It's getting harder and harder to borrow money right now in the mortgage market. So the solution would be here is what we were thinking is take the competitive rate, go in maybe a 6-month or a 1 year. And while you get your tax documents all up and running and you claim more money, like that's what it comes down to. Most times it's about the amount you're claiming. So if you want, go claim double the amount of income, pay double the amount of taxes, and then we can get you from maybe 5.95, 6.95 back down into 4.19, 4.44.
Yeah.
So that 2% on your mortgage balance, I don't know if it's worth going through all that, but the exit would be, let's get everything organized for the exit, getting out of this situation. And for 3 is just here to actually kind of bridge the gap, lower the stress level, because that's what I find is happening in this market a lot. People are looking for literally COVID level rates. Give me 1.9%. Guys, it does not exist anymore in this beautiful market. I'm sorry, it's a little bit more decision making now, a lot more looking at the payment. Does the payment match up? Now, what do you amortize your mortgages when you do them? 40 years, correct?
Yeah, so we have a couple different options. I mean, if we're lower loan to value, under 70%, we can do interest only options if you have a client that, kind of prefers cash flow. But if you have clients, some clients have the mindset that, they want an amortized payment. They want to, bring down the principal. Obviously, at a 1-year term, 40-year amortization, you're not really paying a ton, but it's really just a mindset thing for clients. So we have both options. I mean, there are private lenders, mortgage investment corporations that really only do interest only, closed terms. So you don't have that flexibility.
But you guys are very flexible on that side.
Yeah. Like I would say, I've been on the private side for about 5 years now. And I would say that honestly speaking, without signing bias, I think 3 probably has one of the most flexible products out there.
I can attest to that. I can. And the other thing, let's talk about this too. So we talked about bridging. We talked about kind of a solution-based situation. Let's talk about looking at your ADU development, things like that, because that's what's happening. People want to build these additional units. They're not getting approved by a bank. That's a specific product you guys will look at, right? Within the loan to value of the current home.
Yeah. So, I mean, we just recently did a deal where we did, I think it was a second mortgage on a property. The loan to value was, well within our appetite. I think we were under 60%.
And also under, I think, 8% or something.
And the borrower wanted to build an ADU with on his property, and we had no issues with that. We actually also recently started dabbling in our construction financing as well. So there are those little niche products that we offer. I mean, obviously every private lender out there does first and seconds. We can do those as well, but there are little niches that we kind of play in. I mean, the biggest thing that, we take pride in is just how transparent we are with everything that we offer. Like, the biggest thing is what you see is what you get with us. Like, there's no guessing game. There's no gimmicky marketing where we're saying, hey, we're starting at $599 and you submit a deal over to them. And then all of a sudden you get a commitment at $899 and you're kind of asking yourself, scratching your head, like, how did we get to that? Like, I thought you guys offered $599 and it's like, oh, well, there's a premium here, a premium there. And because of this, because of that.
You wanted the frills? I'm sorry. They cost money. You wanted the frills.
Yeah.
You got the no frill communication. Okay. That's awesome. Let's pivot quickly, because I know we're going to make this nice and beautifully short, but what do you love about your job?
Honestly, for me, like, I've been doing sales since 2016. Started inside sales at, a monoline in the banks, and then went all over to the alternative side. And now I've been on the private side for about 5 years. But for me, it's honestly just, I'm a big relationship guy. Like, I'm someone that really prides myself in genuinely getting to know people and having those genuine connections. And, being in the mortgage space and dealing with, mortgage brokers across Ontario, I think, anyone that asks you about me, it's just, someone that is just super authentic, super genuine, and being able to create those lasting relationships with people. I think that's kind of where I get my success. And, being with 3 Point, like, the team behind me, I always, tell my underwriters, tell Brad, tell the leadership team that, like, I can only go so far, but the team behind me is really the big reason why we're seeing a lot of success in Ontario right now. It's only been 3.5 months, but I mean, you ask anybody and everyone's super happy with the process and the rates, the fees, the programs. And, that's just a huge testament to us as a team. Like, we win as a team, we lose as a team. But for me, it's really just, being able to create those lasting relationships.
That's awesome, man. You already went into my next thing. What do you like about 3 Point? But you kind of encompassed the whole answer as one full answer. So I can't even ask you any more about that.
Yeah, I mean, 3 Point has been really, really great in the 3.5 months that, I've joined. Like, we're a small but mighty team. And, like, it really just kind of feels like that family feel where everybody takes part in our successes. And I always, like, harp on the underwriter saying, like, listen, like, I'm the face of the franchise, but it's really,
look at his face, guys.
but it's really just, like, the team behind me. Like, I always tell them, like, how awesome they're doing. Actually, funny enough, there was, like, we've obviously grown a ton in the 3.5 months that I've been here. So obviously having 2 underwriters, 2.5 if you count Brad, doing deals. Obviously they're swamped, and we actually had as a sales guy, I want to try and do every deal. But we had a deal actually not too long ago where Tanya was just absolutely swamped, and we were going at it. I was pushing really hard and she kind of snapped. And I was like, oh boy, like, Brad, what's going on? Like, why is Tanya so mad at me? Like, I'm just trying to, like, work with the deal. And it's like, we're super swamped and she's stressed out. So at the end of the day, I just, sent a quick message to her and I said, listen, Tanya, I was like, I just want you to know that I appreciate everything you guys do.
Yeah.
Like, I know you guys are super busy. Everyone's stressed out, but, I just want to make sure that that I love everything that you guys do. And we kind of hashed it out.
And you does slow the day down. I won't lie to you. You're pretty chill. So what I'll say is, okay, so one last thing and then we'll jump to it and I'll talk to you guys about the private mortgage guide. Okay. Where do you see the market going? You guys see yourself getting even more busier because rules are cracking down. Where do you see 3 Point in 5 years, 3 years, 2 years? What are you thinking?
Yeah. So I think, honestly, the trickle down effect will probably continue for the next little while. I think there's still a lot of instability in the market. And there's just a lot of clients that just aren't fitting that box that just seems to be getting tighter and tighter with the banks and the monolines and even alternative lenders these days. Programs are kind of shrinking and products offerings are shrinking. So I think there's definitely going to be a lot of opportunity for us, especially here at 3 Point. I mean, obviously we've been lending in Ontario for the last 8 years, but like Brad mentioned, like up until I joined, like, we didn't actually have anyone boots on ground and that knew the markets, knew the brokers. So I think, the sky's the limit with us. I think obviously Brad probably wants me to slow down a little bit. But
too many.
Yeah. I mean, we're obviously in growth mode, but we also want to have, steady growth. We kind of play in a specific sandbox, and we like playing in that sandbox, and we don't deviate from that. I say, like, with products 75% LTV and under, I think we are unbeatable. We're not going to be everything for everybody.
Yeah, so no 95% loan values over here, okay, guys?
Yeah, the I Love Mortgage Brokering posts that I see on a day-to-day basis on Facebook, sometimes I'm just scratching my head at the types of deals that people are trying to shoehorn into lenders.
Yeah, will 3-point do 110% loan to value?
That might be a tough one. Maybe call Brad on that one.
See, he doesn't actually say no. He did flex. He's like, oh, it's going to be a tough one. I'll see what I can do. I'll figure it out. And you just won't get a call. But on the good ones, under 75%, okay, I would be honest, that 3-point is a good option, guys. And as a borrower, it's probably one of the best competitive rates you have in the market right now for alternative lending solutions, guys.
Yeah.
Okay, so other than that, I would like to just say, guys, if you want, go to www.mortgagesuite.ca, our website. And please, if you are looking into obviously bridge loan financing, maybe an ADU, or if your bank's declined you and you want to look at a situation where you have to go into a private, this complete private mortgage guide will help out. It basically goes through all the costs. It's a guide that's updated once a year with new terminology, with the new processes. Basically, it goes through everything that you would cost yourself. It breaks down and it shows you how to get in and out and what you should be looking for when you do a private mortgage. Okay. And if there's something happening that's not inside this guide, it means it's not proper. So either way, guys, go ahead and download it. And if you want to go to a good, lender like 3-point, give us a shout here. This is the guy who'll probably call you up and say thanks for, doing your application. It's Justin. Okay, guys? Thank you so much. Do you want to say goodbye? Or?
Yeah, I mean, thanks for having me.
And say sorry. What's your face again? Say sorry. Be like, I'm really sorry you were so swamped.
Yeah, I'm sorry to Tanya. But
Tanya, we are sorry, okay? We know you're swamped.
And it's really because of this team.
It is actually. That's so true. Sorry, Tanya. Justin says sorry, okay? Thank you so much, guys. And we're good. It's a wrap. It's a wrap. Cheers.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.